Welcome back to the Ultimate Trading Podcast for beginner traders. I'm Isabel Maria, and today, we're going to talk about one of the most crucial yet often misunderstood aspects of trading: confidence. Confidence isn't just a nice-to-have quality, it's absolutely essential for success. It's what allows traders to make decisions with conviction, stick to their strategies, and navigate the ups and downs of the market with emotional stability. But, just as with everything in trading, confidence must be carefully balanced with a willingness to learn and adapt. If you've been trading for a while, you've probably experienced that moment when doubt creeps in. Maybe you've hesitated to pull the trigger on a trade. Or you've second-guessed your strategy after seeing a sudden market movement. It's moments like these where confidence is tested. But the key isn't about having unwavering confidence in every decision, it's about developing the ability to trust your analysis, execute your plan, and stay grounded even when things get chaotic. Now, let me ask you, how often do you find yourself doubting your decisions after you've placed a trade? It's completely normal, and even healthy, to question your actions from time to time. But there's a line between healthy doubt and paralyzing indecision, and crossing that line can cost you opportunities and profits. Think about it. In trading, if you're constantly second-guessing yourself, you'll start missing entries, pulling out too early, or hesitating when you should be executing a plan. But when you trust your strategy, follow through on your decisions, and stay calm in the face of market fluctuations, you're far more likely to achieve consistent success. Confidence in trading doesn't mean you're never going to face setbacks or losses. It means that when you do hit a rough patch, you have the emotional resilience to keep going, learn from the experience, and refine your approach. The trick is developing that confidence, but also keeping it in check, so it doesn't tip into overconfidence, which can be just as damaging. One of the key ways to build confidence is through education. This is where it all starts. You can't be confident in something you don't understand. So, whether it's reading books, attending webinars, or learning from successful traders, knowledge is the foundation of confidence. Think about it like this: if you're armed with solid information about the market, your instruments, and your strategies, you'll be far more comfortable executing trades and making decisions. The more you know, the more you can trust your judgments. But, of course, knowledge alone isn't enough. Experience plays a huge role. That's why, when you're starting out, it's so important to practice with demo accounts. You can read all the books and take all the courses in the world, but until you start putting that knowledge into practice, it won't have the same effect on your confidence. Start small. Use a demo account to get comfortable with executing trades, setting stop losses, and understanding the timing involved. As you gain experience and start seeing the patterns in your trades, you'll naturally feel more confident in your abilities. One thing that helped me early on was backtesting my strategies. You can read all the theory you want, but until you test it against historical data, it's hard to know how well it's going to perform in real market conditions. By backtesting, you can see how your strategy might have worked in different scenarios, which gives you a sense of trust in it. When you've tested something that consistently works under varying market conditions, that's when your confidence gets a real boost. Another crucial part of building confidence is risk management. Confidence isn't just about knowing when to enter and exit a trade, it's also about knowing how much risk you're willing to take and setting parameters to protect your capital. When you know that your risk is controlled and that you're not gambling with your entire account, it makes it much easier to execute trades with confidence. And this brings me to another point: confidence isn't about betting big to make huge profits. It's about steady, consistent growth. One of the most important lessons I've learned in my trading journey is that confidence must be balanced with openness to learning. It's easy to fall into the trap of thinking you've got it all figured out. But the market is dynamic, and strategies that work today might not work tomorrow. I always remind myself, no matter how confident I feel in my current strategy, I need to stay humble and open to adapting. This mindset is especially important when you're dealing with overconfidence. We've all seen it happen. A trader starts making consistent profits, gets comfortable, and starts taking on more risk. Maybe they ignore their stop-loss levels, or they start chasing trades that aren't aligned with their strategy. Suddenly, that trader is hit with a big loss, a loss that could have been avoided with better risk management and a bit more humility. The trick is to be confident in your approach but never let it blind you to the need for continuous education and adaptation. This brings me to an example I want to share with you, the story of Jane, a currency trader I mentored. Jane had been studying the markets for about a year and was making progress, but she wasn't confident in executing her trades. Her hesitation often led to missed opportunities or suboptimal entries. It wasn't that she lacked the knowledge, she had studied extensively, taken courses, and attended webinars. But when it came to pulling the trigger on a trade, she would freeze. Jane decided to start practicing more. She opened a demo account and started trading, meticulously logging each trade and analyzing the results. Over time, her confidence began to grow. She started seeing patterns in her trades, and with each successful trade, her confidence grew. But here's the kicker, it wasn't just practice that helped her. It was the backtesting. She started testing her strategies using historical data, and when she saw how her methods worked consistently, she started trusting them more. Risk management also played a key role in her journey. Jane set clear parameters for her risk, she made sure she never risked more than 1% of her capital on any single trade. This allowed her to make decisions with less fear, knowing she wasn't putting her entire account at risk with every trade. As her confidence grew, she also began to trust her analysis more and started sticking to her plan, even when emotions were running high. But Jane didn't stop there. She joined a trading community and found a mentor. This mentorship helped her stay grounded, and the community provided support, shared insights, and allowed her to learn from others. More importantly, it gave her a sense of accountability. Now, it's important to remember that while confidence is essential, it's not about being stubborn. Jane learned to adapt her strategies when market conditions changed. She was open to adjusting her approach based on feedback from her mentor and peers, and she continuously refined her methods. This adaptability, coupled with her growing confidence, led to a steady improvement in her trading. Today, Jane is a much more confident trader. She trusts her strategies, she knows when to pull the trigger, and she has the emotional resilience to deal with the ups and downs of the market. But most importantly, she's learned that confidence is a journey, not a destination. I want to leave you with this question: how do you balance confidence with learning in your trading journey? Have you found a strategy that helps you stay humble and adaptable? I'd love to hear your thoughts and experiences. Leave a comment down below in the comment section, I'm always excited to hear from you. So, as you move forward in your trading career, remember that developing confidence is essential. Trust your analysis, trust your plan, but stay open to learning and adapting. By doing so, you'll build the emotional strength and flexibility needed to navigate the markets and grow as a trader. Stay confident, keep learning, and I'll catch you next time.
Thank you for listening to the 101 Trading Tips in the Ultimate Trading Podcast, brought to you by bellsforex.com AudioWorks. We hope this episode gave you insights, perspective, and practical ideas to strengthen your trading mindset and improve your decision-making. Stay disciplined, keep learning, and remember, every trade is a step toward building your edge. If you found value in today's episode, don't forget to like, subscribe, and turn on notifications. Sharing the podcast with fellow traders helps us grow and bring even more free trading education to the community. Visit us anytime at bellsforex.com for resources, guides, and tools to support your trading journey. Until next time, trade smart, stay disciplined, and keep building your edge. Happy trading.